All right. Welcome, everybody. Good morning. Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes to get started here. We pulled up the chat there. You can drop a comment in the chat as you tune in. See some people were already dropping comments in there, so feel free to put one in there. Good morning, everyone. Wait just a couple of minutes here so we can go live on all of the different platforms and give everybody a chance to tune in. Hope everyone had a great weekend. Ready to get back to it for all the loan officers out there, ready to get back to the grind, hit the phones, close these deals. It's that time. First of the month as well. Time to kick off this month with a bang. And again, those just tuning in, we're just waiting 1 minute here to get started. Good morning, everybody there in the chat. Adam, Matthew, LaShonda, Mercedes, the other Matthew, Sonara, Mark. Shout out to everybody tuning in, dropping comments here. Good morning to everyone, and hope everyone had a great weekend and is ready to get back to it. All right, it looks like we are good. We are live on all the different platforms, so we can go ahead and get started. What we'll do is we will take off the chat, and then we will go ahead and get into it. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our President, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. Now, every day we do this show, and we go through the different rates live for some different programs, and then we do a deep dive into a different topic every day. Now, today's deep dive is something that is very familiar to us because we are a lender that specializes in non-QM loans. And one of the most popular non-QM loans that we do are bank statement loans. So we're going to go into a deep dive today on bank statement loans. Jose's got some quotes pulled up to do a dive into those. But first, just like we do every morning, let's go ahead and pull up today's live rates and check out what the market is doing today. So Nick, let's go ahead and pull up our pricing tool and see what it looks like this morning.
All right, let me switch my screen and we'll get into it. Now, as Kyle mentioned, this is our pricing tool for our mortgage professionals. We have over 300 licensed loan officers, and we're licensed for primary second homes in 22 states, and we can do our business purpose DSCR loans in 44 states, so pretty much every state. If you would like a full loan estimate with a full breakdown of all the fees, please let us know and get with one of our team members. This tool will show us the general rates and the general APRs for the program. But if you'd like a full breakdown, please let us know. Now, today is May 1st, just after 11 a.m. So we have some rates live for our standard programs. So we're going to go through and set up a general scenario and compare across our programs. So we'll set all of our demos today to a $400,000 loan amount. We will set the LTV at an 80% loan, 20% down payment. We will set the desired price to $99. That means we're going to ask the computer to find the best rate at one discount point in cost. Most of our customers are asking to buy down the rate a little bit since they're higher than most people would like. So that's our typical request. Now we're going to compare our options here for conforming conventional. Then we'll check out our FHA rates today. And then we'll go into our expanded guidelines, aka non-QM, where we have over 5,000 additional programs where we can use alternative income. Now, we don't do VA live since that's only for our eligible veterans. So if you are an eligible vet, we definitely appreciate your service and we'll be happy to quote you, but not everybody is, so we don't do that live. And same thing with USDA, that's only for eligible property in a USDA area. So if you are shopping in one of those rural areas that qualify for USDA, please let us know. We'd be happy to quote it for you, no problem. But first, let's set up our conforming example. We're going to do a purchase, 30-year fixed loan, pretty standard, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with those basic settings, let's check out our conventional rates this morning. It's actually about the same as last week, so not much movement yet this morning. Pretty much the same as last week, 6.5 rate here for 1 discount point in cost, and a final APR of 6.676. So pretty much the same as it was last week. Sometimes no news is good news. Hopefully we'll see some downward movement later this week. Now, this is our conforming conventional options. If for any reason a borrower doesn't qualify for conforming or conventional, typically the next option we go to, we'll set up the same exact scenario, is an FHA program. FHA does allow a little more leniency on credit events and a higher debt to income ratio we can take it to. So usually that's the next option we look at. So we'll keep all of our settings the same as our other demo, and that way we can compare our FHA to our conventional. So obviously FHA usually has a lower rate. So here this morning, FHA is a 5.75 rate for 1 discount point in cost and a final APR of 6.352. So in this scenario, actually FHA is a little bit cheaper for this exact scenario, even with the upfront mortgage insurance and the yearly mortgage insurance that are required for FHA. Those have been reduced recently and the APR is slightly lower. So 6.3 something for FHA here, and remember it was 6.6 something for conventional. So for this scenario, definitely recommend our borrowers out there shopping, compare conventional to FHA. In this scenario, it might actually be a little bit cheaper. Now let's go back and pull up our final demo for our primary home. If for any reason our customer can't qualify for conforming or FHA, many other banks or lenders don't have other options. And fortunately, we have our expanded guidelines, non-QM, where we have over 5,000 additional loan programs. So we'll set everything else up the same, except we have a new option that pops up when we do non-QM, and that's our income verification. So full doc is what we choose for, that's what we have to use for conventional, and FHA, that's 2 years of tax returns, what everybody's used to. So typically we'll choose a non-QM program to use alternative income. So we have 1 year alt doc, 2 year alt doc options. We have asset options where we don't even use employment, we use a large asset. We have our business bank statement options are very popular. Investor DSCR, we'll go over in a minute for investment properties. Personal bank statement, 12 months. That's definitely our most popular program and one that we'll go into in depth here with Jose in a minute. And we also have VOE, 1099, P&L, all kinds of different programs available. But our most popular program by far that we do in our demo is our personal bank statement 12-month program. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they present 2 years of tax returns, have various write-offs and may not qualify at all or may not qualify for as much income as they wish to in order to get the home that they want. So in this case, we'll actually use their last 12 bank statements here to determine a debt to income ratio of 40 using their actual cash in the bank statements rather than the tax returns. So most of our self-employed borrowers qualify where they would not qualify or qualify for much more income and therefore the home that they want. So this is definitely a solution that we love to provide, especially where they would not otherwise qualify. So these are solutions. These rates are always a little bit higher, but let's check out our non-QM rates this morning. So looks like the best option at the top here, 7.25 rate for 0.75 discount points and costs and a final APR of 7.322. So remember, the conventional was 6.6 something right here. Just for a little bit more, we can now use bank statements and qualify where we would otherwise not qualify. So great solutions for our borrowers. And notice there are a ton of different options here. So some of these may allow things like credit events, like foreclosures, bankruptcies. There's tons of different programs that allow us to use bank statements for various reasons. So please get with our team. They'd be happy to run through all these different options that we have. Now, before we pass it over to Jose, we always want to do some live pricing for our investment properties for our investors out there. So whether you're a first-time investor or you have 10, 100 properties, we definitely have some options for you guys to check out. So let's check out our live rates this morning for investment property. Set it to 80% loan to value, 20% down payment. And we're simply going to compare our conforming options with our non-QM options. Remember, FHA, VA, USDA are not eligible for investment properties, so we'll simply compare these two here. So we'll set to conforming. Everything else will be the same as all our other demos. All we changed was investment property occupancy. So let's check out our conforming rates for investment properties. So as we say every morning, the GSEs have added additional, what we call loan level price adjustments, basically fees for investment properties. So unfortunately, we don't have any low cost options at the moment. So the best option the computer found here, still great for our borrowers that qualify full doc, is 7.125 rate for 3.25 discount points and costs and a final APR of 7.376. So obviously a little bit higher APR here than the primary, and the discount points is usually what the borrowers are asking us to give other options. So many of our investors would like, or don't mind, I should say, a higher rate if we can lower the discount points, the cash out of pocket that it's going to cost. So if we cruise down the sheet here, we'll see some options at a little higher rate with better cost. This is a great option, 7.5 for 1 discount point cost. That would probably make a lot of investors happy. So definitely recommend that our investors check out our various other options. But I always want to present our non-QM options as well. So let's go back to our pricing tool here and do our final demo to compare. So when we do investment property, set this back up to 80% loan to value. And when we pick expanded guidelines, aka non-QM, we have a couple different options now to select. So first, we need to select our income for our investment property here. And our most popular program by far for an investment property is going to be our Investor DSCR program. That's because we don't actually need any income or employment from the borrower. We're simply going to use the estimated rental income from the property we're purchasing to determine if that rental income can cover the expenses of the mortgage here, the PITIA. If the rental income can cover the expenses and the property cash flows, that is a ratio of greater than 1.00, and we have a ton of options for DSCR loans for that. If the property doesn't quite cash flow, if the rents don't quite cover the PITIA of this mortgage, it would be a ratio under 1.00, and we still have options for those as well. For this demo, though, I'm going to leave this blank so we can see all the different options available. And the last thing we have to select is a prepayment penalty, which is standard on a non-QM investment property. We always choose 3 years. That's the most standard. We can choose 0. That will limit the loan programs and cost more money. Or we could choose 5 years. That will also limit the loan programs. Not all of them allow 5 years, but saves us a little bit of money. So for all our demos, we always choose 3 years. That is the standard for these programs. So let's check out our DSCR rates this morning. So it looks like here the best option at the top, 7.5 rate for 0.975 discount points and costs and a final APR of 7.580. So almost identical to conventional here. And we can switch it over to a DSCR loan, which requires no employment, no income from the borrower. And since it doesn't require those things, many times our investors that have multiple properties can cash out multiple properties to purchase multiple other properties using these programs. Don't have to go one by one on these loans. So a lot of our investors love to start multiple loans with these. Also, if you cruise down the sheet here, you see all kinds of different DSCR options that we have, different prepayment period options and stuff. So tons of different ways to structure these DSCR loans. Please get with our team. They'll navigate you through these hundreds of different options. Some of these may allow things like short-term rental income, things like that to use for the DSCR purchase. So tons of different options we have here. Please get with our team on those. Now, let me go ahead and switch my screens and we'll introduce Jose's deep dive topic for today. Give me 1 second. And for those of you who joined us earlier, you know, but today we're going to go into a deep dive on bank statement loans. So as I always mention when we're doing our live pricing, this is one of our most popular programs, if not the most popular program, when we're doing a primary purchase using non-QM. So tons of different ways to structure this. I'm sure Jose will have a couple different quirks that we can use here. Definitely can use different months as well. 12 months is the most common, but there are other options as well. So Jose, if you're ready to take it over, let's go ahead and check out some live demos.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, bank statements is one of our funnest program options. It is always amazing when you can get a borrower and just by using our guidelines, transform his income from $2,000 a month to $20,000 a month, and then they qualify for the property that they're actually looking for instead of settling for the property that their tax returns allow them to purchase. Because as we know, full doc is not just about tax returns in the non-QM world. Full doc is also bank statements. Full doc is also asset depletion or asset utilization. right? And full doc is also profit and loss statements. Those are all acceptable full doc type options to allow us to meet the Dodd-Frank Act law and allow us to have a full doc component to our loan. So it's not just about traditional quote unquote full doc using tax returns, pay stubs, W 2s, as we're normally used to when we're talking about full doc. And something I should also let you know that most of the non QM options, um, bank statement and traditional full doc using tax returns, have the same pricing. So just letting you know before you go down that rabbit hole trying to get all those full docs, traditional full docs for your loan, make sure if you're doing non-QM, check the pricing. It's 9 times out of 10 it's the same, and you don't have to go jump through all those hoops of fire if your borrower has the 12 months business or personal bank statements. Um, we are using business bank statements 12 months in this example. 24 months is preferred if you want to get a little bit better pricing. Usually it's a quarter point better pricing to use 24 months versus 12 months when the investor has any difference at all. Keep that in mind. They all don't offer both options, but usually when we go 24 months out on the bank statements, it does present additional challenges because, as you know, what can cause these bank statement loans to falter is when we have declining deposit trends, low ending balances or negative ending balances in any given month, NSFs and overdrafts above the allowable amount. So these are all challenges that can cause our bank statement loan to falter, and why we usually do not want to extend the analysis period more than 12 months. So, first example here is a primary purchase with 10% down. Right now, look at those rates. We're looking at 8.5%, giving us a lender credit with 7.25% buy down. Now, I am going here for $1 million purchase and a $900,000 loan because I wanted to also bring up another interesting component of all our non-QM loans. Essentially, this is like a jumbo loan as well. We don't call it a jumbo loan because we just simply look at it as a $900,000 non-QM loan. But remember, when you are above the conforming loan limits in the area where the property is located, it would normally have to be a jumbo loan with different requirements. So here we are, non-QM, 10% down, no mortgage insurance. It is included in the rate. So we're looking at very good options here with 7.25, costing a little bit over 2 points, and 8.5% giving a lender credit. That's 10% down, $900,000 loan. So now we got another bank statement option here. I purposely did it. Now you know numbers look a little weird, right? But it's to match $2,001 and $2,352,943 purchase price. But I'm trying to get above the $2 million loan amount here, so you can see that with 15% down, and look at those rates, 8.125 is at par. 7.375 obviously does have a cost, a little bit over 2 points, but it is a $2,001 loan at 85% loan to value. No mortgage insurance either. So in our same scenario, I wanted to show you our $2,001 loan cash out. It is possible, 85% LTV. Again, not only can we do it as a purchase, but we can do it as a cash out, looking at 9.125 at par, 8.375 costing a little bit above 2 points. And now we have our regular non-$2 million loan. Rate is still amazing. It's 0.25% lower when you drop below the $2 million, but we're still getting 85% LTV here, $850,000 loan. And on our bank statement investment cash out, now rates do drop a little bit there. You're looking at 8.625 is at par, or a little, actually $1,000 lender credit. 7.25 is the lowest rate. And this is our investment, 80% LTV. And then our last example is our bank statement primary cash out option, where we're looking at 8.875. This is at an 85% LTV. 8.875 is at par, and 8.25 has a buy down of roughly 1.75 points for that $850,000 loan. So very good options here. Main takeaway I want you to note is above $2 million, we're at 85% LTV on a bank statement loan. And I know that a lot of our bank statement borrowers do qualify for loan amounts of this size and more. So very good options for high dollar amount loans.
Perfect. Okay, I don't see any actual questions about the programs to go through here, so I think we can go ahead and wrap it up. So thank you everybody for tuning in. Thank you, Jose. That was great. Bank statement loans, as Nick said earlier, one of our most popular loans here at the Mortgage Calculator. If you're a borrower out there looking to get qualified, you can contact us, themortgagecalculator.com. You can apply online. We'll set you up with one of our loan officer consultants who can walk you through the process of all of these different types of loans that we have. We have hundreds of bank statement loan programs that calculate income differently and have different allowances for credit events and things like that. So you can get with us there. All the loan officers, go ahead and connect with us at themortgagecalculator.com if you'd like to join the team. Thank you everybody out there that's already on the team tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all at 11 a.m. Eastern tomorrow for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everybody take care. Have a great day.
Thank you, everybody.
Thanks, everybody.